The European currency came under pressure in yesterday's early trading hours, weighed down by data on business climate, current conditions and expectations from Germany. The indicators turned out to be worse than expected. Nevertheless, the euro resumed its bullish run, recovering early losses. Sterling followed suit. The risky assets were supported by disappointing U.S. consumer confidence statistics. The index fell in September to 98.7 from 105.6 in August, falling short of the 103.9 forecast. The report pushed the greenback down and reinforced expectations for further interest rate cuts by the Federal Reserve. After all, the U.S. economy remains fairly resilient but still needs stimulus to avoid recession next year. Now let's take a look at today's macroeconomic calendar. It is bereft of any important news releases except for a speech by Bank of England policymaker Megan Green. However, her statement is unlikely to have a major impact on market sentiment. With this in mind, the euro and the pound sterling have every chance of extending gains in the first half of the trading day. As for U.S. statistics, traders may take note of U.S. new home sales data and comments from the Federal Reserve Governor Adrina Kugler. Given that many Fed policymakers have recently expressed the need to continue easing monetary policy, the U.S. dollar is unlikely to gain support from Kugler's speech. If data on new home sales comes in dismal, the greenback is expected to extend losses, allowing the euro and the British pound to hit new one-month highs. From a technical perspective, the 1-hour EUR USD chart shows that the pair has already broken above the last week's high of 1.1187. This level is now acting as support. A decline followed by a false breakout at this mark will generate a strong buy signal, with the euro rising to 1.1213 and probably 1.1237. At this level, I recommend going short on the rebound to profit from a 15-20 pip move. Short positions at 1.1213 can only be considered after a false breakout. Alternatively, a decline below 1.1187 will generate a sell signal and drag the euro down to 1.1165 and even 1.1142. The most distant target will be 1.1119, where it would be wise to go long on rebound to catch an intraday correction of 15-20 pips. Going long at 1.1165 and 1.1142 will only be relevant in case of a false breakout. This would allow the European currency to extend its bullish trend that began on September 11th. Speaking of the British currency, it is confidently trading upwards. A slide followed by a false breakout at 1.3390 will generate a strong buy signal, driving sterling up to 1.3435. A breakout and consolidation above this level would pave the way for further gains to 1.3468 and 3510. At this mark, traders are advised to go short on the rebound, expecting a 30-35 pip move. Short positions at 34.35 and 1.3468 can only be opened at a false breakout, as it's quite risky to trade against the bullish trend. In the bear case scenario, going long will be relevant at 1.3341 on a false breakout of 33.01 on a rebound in anticipation of an intraday 35-40 pip correction. Best of luck.